There's a huge problem for the stock and bond markets for retirement investors. In this video, we will explore problems with the stock market and economy, signs the stock market selling has reached a bottom, and what should bond ETF investors be doing now. Welcome back. This is Richard with Wisdom Investor. The stock and bond market is starting off 2022 in a negative way. Stocks are plunging lower, bonds are moving lower, interest rates are moving higher. This is causing a lot of stress to investors. So we're going to look at what stocks are doing well, what stocks are not. Also, when is this selling going to stop? And also look at what bond ETF investors should be doing. Since the first part of 2022, the small cap stocks and the technology stocks have been plunging to the downside. The technology stocks typically lead the market to the upside, but they also lead the market to the downside. You can see stocks like Microsoft down on the year, Amazon down, Netflix down 39.1% for the year so far. Now there is some good news out there. Not all stocks are selling off. The energy index is doing well, staple stocks are doing well, and also commodity stocks. Good solid dividend stocks like Verizon, Chevron, Exxon, Bristol-Myers, Coca-Cola are also up for the year. So what's the problem with stock market and economy? By the way, if you have any suggestions or ideas on this, leave your comments. They're much appreciated. But we have a rapid rise in interest rates as the Fed is threatening to raise interest rates. Also, the supply chain is a problem and earnings reports are coming out. We're looking at the 30-year fixed mortgage average interest rate here at the bottom right. When it starts to skyrocket like this, it does send shock waves through the stock market. Let's take a look at the supply chain and earnings report. If the car industry, for example, can't get new cars, eventually their sales are going to be down. Eventually, this is going to be affected and show up in the earnings reports. And that could be where we're at right now. We start to see some of the effects of the supply chain being so weak that sales start to drop. Therefore, profits drop. Now, there's still some positives in the economy. Unemployment is at a low of 3.99%. As long as people are working, they've got money to spend. Also, the Fed has threatened to raise rates, but they haven't done it yet. So the question is this time different? We have this supply chain issue, which we haven't had problem with in the past. Is that going to make a difference in the markets going forward? Let me know what you think. We're looking at the S&P 500 here on a weekly chart. The S&P 500 has now had a drop of 10% since the first of the year. We're looking at the S&P 500 on a daily chart here going all the way back 2 years. Here's the pandemic time period when the markets collapsed. Here we are right now. The red line is the 50-day moving average and the blue line is the 200-day moving average. We've now dropped below that 200-day moving average on the S&P 500. We're looking at the number of stocks above the 200-day moving average for the S&P 500. Prior to today, it was right around 60% of the stocks above the 200-day moving average. Here's the number of stocks above the 50-day moving average for the S&P 500. You can see here we're reaching a point in a bull market where we reached the low point of the number of stocks above the 50-day moving average. So if we're in a bull market, we're going to continue in a bull market. We should see a bottom here pretty soon. What are some of the indicators we're going to be watching here to see if we've hit a bottom? We're looking at the New York Stock Exchange new high and new low line here. And right now we're at a point where typically in a bull market, we're going to start to see some bottoming in the market, maybe buying in the market. Now here's what it looked like in the pandemic. You can see we came down to some extreme levels. Also, we'll be watching the VIX index. When the VIX index peaks and starts coming back down, that would also be a good indicator to see that we may have bottom. Here's the NASDAQ 100 QQQ. It's down almost 15% off of the high. Here's a look at the Dow Jones Industrials Index. And again, it's dropped almost 10% off of the highs of 2022. What should bond ETF investors be doing? I got a question from one of our viewers that I'm mostly in fixed income ETFs, bond funds. What should I do? Let's review the current bond and interest rate relationship. Here's a TLT bond ETF. As bond bond prices move lower, interest rates are moving higher. Let's look at the three main parts of ETF bond investments. We want to think about the yield, the net asset value of the price, and the duration. That's the average length of the bond holding. We're going to look at what's going on with bond funds here right now. At the top here is longer term bond funds. And then the bottom section is shorter term bond funds. None of these are for recommendations. This is more for an example here. We're looking at the 20-year bond fund here at the top. It's down 2.6% for the year for the price because we said as interest rates go up, bond prices go down. So right now the yield on the 20-year bond is 1.96% and it has a duration of 19.24 years. The longer the duration of a bond fund, the greater the yield typically, but also the faster the price will fall. Here's PIMCO investment grade bond, has a duration of only 1.74 years compared to the TLT, which is 19.24. Has a yield of 3.62% and the net asset value is only down 1.09%. Now for our investor here who's invested in bond funds, right now I would just stay put where you're at. You're going to be receiving the income from the yield. Markets have not been totally destroyed in the bond ETF funds yet. I would just hold tight right now. What am I going to be looking for a market bottom? We're going to be looking for that selling volume to start to dry up. Also, we're going to be looking at the number of stocks above the 50-day moving average and the 200-day moving average to bottom out also in comparison to what they were doing in the past. And we're going to also be watching the new high, new low list. When that starts to bottom out and start to improve, that will tell us selling has stopped. We'll also want to see some basing action of the price. We want to see that price start to hold at various support levels. Again, if you have any questions or comments, leave your comments. I want to thank you for watching and stay tuned for our next update.